April 15th, 2014, current time 10:47 GMT. Jay Meisler here with the daily Forex trading outlook. Markets are still in a pre-holiday mood. As I suggested, it's not one where you usually see big bets being made. The dollar is generally having a better tone. Again, eyes are on the stock market, which had a good day yesterday, and today eyes will be on U.S. data, although none should be really market moving. I think we have Empire State, manufacturing, U.S. PPI, NAB, HB, housing, and long-term tick flows. It should show an economy that's rebounding a little bit off the winter. Inflation, especially in the core level, is expected to be unchanged. And here we are. I think a good way to look at this is maybe look at a euro-dollar daily chart and what would it take to turn this into a downtrend, because from what I can see, forecasts are still calling for a lower euro-dollar this year. And as I've been pointing out, this 139.67 level seems to be the, you can make a case it's the high for the year, especially if the ECB is going to react to euro strength by easing policy. At least that's what they're saying. If you look here, we have a lower. We came off the high here, made a low here, went around 136.70, made a lower high, and for this to turn into a really a downtrend, we have to take out 136.70. So 136.70 is the key level on the downside. You got the 20-day moving average 138.01, 137.56 is the 50, and 137.06 is the 100-day moving average. You can see there's very little in this market. If we get below 138 and stay there, the history of this, the way it's been trading, finds a big figure, trades around for a few days, and then makes a break on one side or the other. So we'll see if 138 can be more than a one-day wonder here. If 138 gets established as resistance, as I've been saying, we can make a case that 135 to 138 is the new range. So that's where the daily chart looks like. If you look at the 4-hour, key levels not to 137.61, and the 1 hour, we came through the 200 period moving average, which is 137.93 briefly. That's a key level. Here you have 137.79. I think it's also on the 4-hour chart. That is the next key level, and then we come down right here to this congestion bottom here around 137, say 35 or so, 37 I think it is. So that's what it is. I would take this level here, at 137.21, and here at around 137.833 and 138.21. So I 138.20 to 35 is resistance level. Market will trade with negative bias, while below 138.20, 138.20 to 35 is kind of neutral. It has to get down below this 136.790 level, and then 137.79 or so to open the door to 137.50. So if we stay between 137.50 and 138.50, 138 is going to set the tone. But we will trade with negative bars probably today, as long as we stay below 138.20ish or so. That's it. I have one thing at the bottom of this chart. You're going to see a link to a special report called 16 trips. Wrong year. 16 tips, trading tips from a seasoned pro. I wrote it. It's really has some insights that you will not find anywhere else. And my hope is that it changes the way you look at trading. So click on this link. Get access to the article. I think it's really worth looking at. Good luck, good trading.